Is this the end of the cryptocurrency platform BlockFi? So the New Jersey Attorney General issues cease and desist order against multi-billion-dollar Bitcoin financial services platform. So let's get right into the story. So according to a draft press release from the New Jersey office of the Attorney General, the Bureau of Securities is planning to issue a summary cease and desist order to New Jersey-based multi-billion-dollar Bitcoin financial services platform BlockFi to stop offering interest-bearing accounts. So if you don't know what they were offering, they were basically allowing people who put like Bitcoin onto their platform to like start making money off of the Bitcoin that they were holding onto it, or like any other cryptocurrency that they had onto it that they were offering it. And they were offering very, very high interest rates, almost to the point where it's like, hey, how are you affording these interest rates? Like it doesn't make sense, right? So if signed, this action could be the first of its kind against crypto lending platforms that have seen rapid growth during the recent crypto bull run. So since its inception in 2017, BlockFi has raised $500 million in private funding and has a valuation of $5 billion. So the undated, unpublished draft contends that BlockFi has been funding and facilitating its cryptocurrency lending and trading operations at least partly through the sale of unregistered securities in alleged violation of relevant securities laws. The New Jersey-based firm offers interest rates between 0.25% and 8.5%, depending on the crypto asset and deposit size, in addition to a trading platform and Bitcoin rewards credit card. And in comparison, according to the FDIC, the national average for interest in savings accounts is 0.06%, while 10-year Treasury notes yield 1.19%. Now, this isn't necessarily that fair, because there's also high interest saving accounts that offer at least like a 1%, potentially even a 2%. That being said, an 8% interest rate is very scammy, right? No matter how you look at it, that's very scammy, right? And when it deals with crypto, and then you see like a number like this, you're like, that's kind of iffy, right? You know, like what are you really doing here, right? Like, are you breaking the law or something? Like this doesn't make any sense, right? Because this isn't something like where it's like an index fund that has a consistent, proven track record of like getting between like 6 to like 15% every year, right? Every single year, right? Like the S&P 500 has basically returned, I think, about like an average of like 8 or 10% every single year for its whole existence, basically. So this is just like a situation where you got to be like really careful about this stuff, which is why you got to be really careful when it comes to cryptocurrency. So the draft settlement statement goes on to highlight how decentralized finance platforms, known in the industry as DeFi, do not offer FDIC or SIPC insurance like traditional banks and brokerages. However, while BlockFi offers similar savings and lending platforms to those that operate on top of decentralized ledgers, such as Uniswap or Compound, it is a centralized company. So in a comment provided in the document by Acting Attorney General Andrew J. Bruck, our rules are simple. If you sell securities in New Jersey, you need to comply with New Jersey's securities laws. No one gets a free pass simply because they're operating in the fast-evolving cryptocurrency market. Our Bureau of Securities will be monitoring this issue closely as we work to protect investors. So while Bitcoin and Ether are widely believed to be commodities based on SEC and CFTC comments and actions, other assets supported by BlockFi such as Chainlink and Uniswap have less clarity. If this cease and desist is eventually signed, it could be precedent setting for how states could deal with other yet to be categorized assets. So when reached for comment, BlockFi CEO Zach Prince told Forbes the company has no knowledge of any impending actions with the New Jersey Attorney General's office. We maintain great relationships with the New Jersey regulators and other state and federal regulators. After the story was published, Prince tweeted, "Late Monday evening, BlockFi received an order from the New Jersey Bureau of Securities regarding BlockFi Interest Account, BIA, operations in the state of New Jersey. We remain fully operational for our existing clients in New Jersey." He also noted that the order calls for BlockFi to stop accepting new BIA clients residing in New Jersey beginning in July 22nd, 2021. So, I mean, this is like an interesting situation when you really think about it, right? Because like, what does this actually like mean for like the future of cryptocurrency? Well, for the most part, it basically will start almost like this, I think almost more of like a competition between the states, right? Like if the states are not careful, and we'll just use, some of the main examples. If states like California, New York, and the New Jersey area kind of thing, right? If they go hard on cryptocurrency with regulations, laws, all that kind of stuff, right? Guess what? You're probably going to see Las Vegas, Texas, and Florida be like, hey, come over here. We're not going to regulate you guys at all. We're not even going to tax you guys at all if you do cryptocurrency. Come on, bring your business down here, come on. Just bring all this massive amounts of money to our state so that we could generate some revenue. Come on. We're not going to bother you much. Just go on. Just build your business over here. Have your business headquartered here, and we're not going to bother you. And if that's the case, if that happens, there's going to be a lot of money leaving, these more strict areas in the country, right? So it's something that you always got to think about, right? It's like this can bode well to like for some states, like as long as there's not like a federal, like nationwide regulation when it comes to cryptocurrencies and like interest-bearing accounts when it comes to cryptocurrencies. As long as there's nothing like that, this would actually probably be good for a lot of states because then they can compete. Because then there's like something that they can compete against. Like, hey, guess what? We have no regulations. Come on and just join us, right? Come over here. Come over to our neighborhood, right? But if there is eventually a nationwide federal regulation when it comes to cryptocurrencies and crypto investing accounts, I think it'd probably be actually bad for the future of cryptocurrency because the whole point of cryptocurrency is basically to be something as like an alternative to fiat money or like the US dollar or like the yen or all that kind of stuff, right? It's supposed to be basically transactions between one another in a very, very simple and clean way. At least that's the purpose. So it's going to be interesting to see what's going to happen. But either way, if you need help with mastering your money, go down below and learn the secret to mastering your money so that if you are in debt or if you just need help, like, building a strong financial foundation, you can learn how down below. And we'll see you in future episodes.